Realty Income Stock, ticker symbol O, the famous monthly dividend paying stock. And I get why. 5.2% dividend yield and 26 years of dividend increases. And with the stock being down 7% year to date, it is an interesting moment to analyze this company. On the 3rd of May, Realty Income presented quarter results where they beat on FFO and revenue by a small margin, which is pretty nice. But does this all mean that the Realty Income stock is a buy at current prices? My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Realty Income do? Realty Income is a real estate investment trust that invests in freestanding single-tenant commercial properties in the United States, Spain and United Kingdom that are subject to NNN leases. When we check the most recent results, we see that net income was reported at $225 million, or $0.34 per share. FFO, one of the most important numbers, was reported a little over $1 and increased 2% year over year. To me, this is a bit disappointing. I would love to see higher numbers here. Realty Income invested $1.7 billion in 339 properties. And one of the things I really liked is the net debt to EBITDA. It is at 5.4 right now. I prefer a number between 5 and 6.5. So this looks really good. And in here we see the results one more time, but also with the year over year results. So revenue was reported at $944 million, a big increase from last year's $807 million. However, net income per share stayed roughly the same as I just showed a minute ago, and it's the same with the FFO per share. A bit disappointing. Realty Income did increase the dividends with 1.6% and now has 102 consecutive quarterly dividend increases, which is really impressive. The payout ratio is at 76%, which is very nice, since this is the average for REITs. So this comforts me a lot. Dividends are covered very well. And in here we see the earnings guidance for 2023. It's expected to hit a net income per share of 1.22 to 1.32. And the FFO is expected to be in a range of $4.05 to $4.15 per share. Same-store rent growth isn't that exciting, sitting at 1.25%, but the occupancy rate does look good to me, with 98%. Another interesting number is the acquisition volume of $6 billion, which is great. This allows Realty Income to grow the business even more. Realty Income has a long history of 54 years of operating. Right now, Realty Income has 12,492 properties within its portfolio across 84 industries. Credit ratings look pretty good to me, and they are the 4th largest global REIT. When it comes down to diversification, Realty Income has 1,259 clients across 84 industries. 76% of the portfolio is focused on non-discretionary, low price point and service. So yes, retail is a big focus, but more on that in a minute. Non-retail is sitting at 15% and other represents 9%. In here we see the top 20 client diversification. We see big names and Dollar General is the biggest client, representing 4%. To me, this looks pretty well diversified. And it's the same story with the industry diversification. Grocery stores is the biggest industry with 10%. So to me, this looks very well diversified. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Realty Income is a $39 billion market cap company. And since this is a REIT, I don't want to focus on the PE ratio but use the price to FFO instead. Right now it's sitting at 14.5, which is a decent number and could indicate that Realty Income is undervalued. Later in this video I will show you my 3 price targets for Realty Income, so make sure to watch until the end. because price to FFO is only telling a small part of the full story here. Revenue is at 3.48 billion, and in this graph we see that revenue went up really nice and steady over a longer period of time. Ever since late 2021, revenue started to increase at high numbers. Over a longer period of time, margins are going down, which is something that I don't like. But ever since 2022, margins are increasing again, which is a good thing. Analysis expects EPS to grow at low to mid single digits. For the revenue, it's expected to see high single digits to low double digits, which is very nice for a company this big. Return on assets is sitting at 3.1%, which is below my 10% minimum. But for a REIT, it's looking not too bad. Return on equity looks really a bit disappointing at 3.2%. And the most important number, return on invested capital, is sitting at 1.8%, which is a low number, even for a REIT. It's slightly lower than the 5-year average, which is also a bit disappointing. Current ratio is at 1.85, which looks pretty good to me. For this type of company, I prefer a number below 2. Total debt is sitting at 19 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at 176 million. So they cannot pay down a big chunk of their total debt, which is something that I don't like. However, debt to EBITDA looks good, as I showed earlier in this video, so I'm not worried that much. But it's still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, do acquisitions and all other things. And in here we see that free cash flow is going up quite nice and steady over a longer period of time. A thing that is also very interesting about this company are the shares outstanding. It's going up in the long run, but the REITs issue new shares to raise capital and grow the business, so definitely a number to keep your eye on. Next up are the dividends. Dividend yield is sitting at 5.2%, which is a great number. Annual payout is at $3.06 and payout ratio is at 76%, as we saw earlier in this video, and not the 208% displayed here. That is because REITs use FFO to pay out the dividends. The 5-year growth rate is at 3.76%, which is not the highest of course. However, with dividend yield sitting at 5.2%, I think it's all good. In this graph we see the expected dividend in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. Analysis think dividends will increase a little bit over the coming years to $3.23 in 2025. Overall, these dividends look pretty good to me, but how about the historical returns? I decided to compare Realty Income Stock with the overall market, in this case the S&P 500. Next to that I added National Retail and ADC. On the 5-year chart we see that Realty Income had a 42% return including dividends, versus the S&P 500 sitting at 68% return. So you were better off owning the S&P 500 ETF. Both NNN and ADC underperformed the S&P 500 as well. On the 1-year chart it looks pretty much the same. Realty Income returned a negative 9%, while the S&P 500 returned 5%. All the other REITs again underperformed the S&P 500. On the 6-month chart it's again the S&P 500 that is the big winner, with all the REITs returning a big negative number. On the 1-month chart we see that Realty Income had a negative 4% return, while the S&P 500 is nearly at a positive 4% return. So bottom line, the S&P 500 beat all the REITs in this list, even with including the dividends. So could this mean that the Realty Income Stock is a buy at current numbers? Well, let's check the price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 10, 11 and 12%. Since I think they will increase their revenue at lower numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. Profit margin I'm filling in 24, 26 and 28%. And for the free cash flow margin I'm filling in 70, 72 and 74%. PE ratio isn't the best way to value a REIT, so I just put in 20. For the price to free cash flow, I'm putting in 15, 16 and 17. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want a higher margin of safety with this company, since it's a REIT. Right now, Realty Income Stock is at $59. I hit analyze, and we see only green numbers. I'm not focusing on the multiple earnings value, but only on the discounted value. We have a low price target of 64, a mid price target of 73, and we have a high price target of $84. To me, the mid price target is the most justified here, indicating Realty Income is undervalued at current prices. My final conclusion on this stock is that I really like this company. It's a great, steady and consistent business that is still capable of growing at high numbers. There are some things to keep your eye on, such as the net income and FFO growth, but other than that, it looks pretty solid. Realty Income is already one of my bigger investments in REITs, but at current prices I cannot ignore it. So I'm definitely buying this stock very soon. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.